Good morning. For Traders Exclusive, this is George Tkaczuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. I'd like to talk about the equity markets this morning. The equity markets are going through a little bit of a sell-off here. One could say digesting its gains, depends what your time frame is. Longer term time frame, equity markets still an uptrend. A little bit, they're right at the support level, so today or tomorrow could be sort of the make it or kill it kind of days. And what I'm referring to is, we'll go over this right away here. So right now, the NASDAQ is doing right below its 20-day moving average, acting very well, as is the Russell 2000. However, the NASDAQ, if it starts dropping to the 7,500 level, that may be a little problematic. And if it gets down to its 50-day, which is about 7,400, then the market may really start getting in some trouble. But for right now, it's still trending up, digesting. It's made some big gains since that May 3rd low, so this is kind of still normal action. Now the S&P's just right above its 50-day moving average, testing it this morning there. So if we continue to bounce from here, that's a good sign. If it fails there, again, that could be a bad sign. Now the Dow also is right at its 200-day moving average this morning, testing that level. And the 200-day has been support for the Dow through this whole correction starting from end of January. So again, it's an important level to hold. And if it holds, then the market longer term is still in good shape. Now if you're a short-term trader, a lot of the things we talked about over the last few weeks, I mean the IPO and the growth stocks, so those are getting hit pretty hard. And as I mentioned last week, a lot of the IPO stocks I said to keep on your list. They were well extended, and sure enough, over the last 3 sessions, Thursday, Friday, today, they got hammered pretty bad. And now it's a good idea to take a look at some of those stocks and see if they're bouncing off their 20-day or 50-day moving average, if they're catching support, and which of any of these will continue to be market leaders or strong stocks going forward. So what I want to reiterate here is you need to take a look at support levels on those indexes. Also, you need to keep in mind a good look at the stocks that were kind of leading the market, the sort of bellwethers for this whole rally. That's stocks like Amazon, Netflix, Nvidia. Amazon's just below its 20-day moving average today. Netflix kind of went a little parabolic, so it's coming back down to its 20 days, see if it can hold those levels. Facebook also too is right about its 20 days. Apple's testing its 50-day moving average. Nvidia's kind of broken down below its 50-day moving average. So you kind of want to just put all these things together in your mind. How are the growth stocks acting? How are the indexes acting? If we continue to see a further breakdown from here, the market may indeed fall into another correction. That's all to be seen. So as we say, let price and volume be your guide. This is George Tkaczuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.